Humans have seen many stock market bubbles in history. But one bubble shaped up the internet of today.
Everybody thought they could get rich quick.
The internet was going to fundamentally change the way business was run.
Cash flow up 102 3/8 in its.
Priceline.com is the latest beneficiary of the internet stock craze.
Everybody across from retail investor to investment bank, we had this period where
technology companies soared. The stock that stole the show today
enjoyed one of the best opening days ever, tripled in price.
Money was growing on trees, which is totally cool while it's going on.
Internet was considered a luxury before 1993. Mosaic browser launch changed the luxury into essential. With 15% to 35% increase in computer owner in the USA between 1990 and 1997. The decrease in interest rates also catch investor eye who began investing in this speculation. In 1994, Netscape browser launch hurt Mosaic, taking 3/4 of browser market, but Netscape was losing money. They decided to go public and open its IPO in 1995. Netscape stock went from $14 to $58 in a single day. In a matter of minutes, Netscape was worth $2.9 billion. This open floodgate of .com companies, with having .com in your company's name, is enough for you to go public, even though you have no profit or in some case no finished product. During the 1995 to 2000 period, the stock market Nasdaq rose over 400 points. It was so mad, people were quitting their jobs to invest full-time in the market. Many companies were spending money, hoping for a future profit, also selling product at free or at discount to create market share with a get large or get lost mentality. Lavish parties and holidays, called .com parties, were organized for employees.
The public market investors did, the venture capitalists did, the bankers did, the companies that are involved in it did. Everybody got caught up into the feeding frenzy.
Who's making money? Who's losing money?
It's really fueled by what you would call the greater fool theory. In other words, there has to be a greater fool than you that buys it, or the whole thing collapses.
What they are already calling Black Friday. They are counting up the damage on Wall Street.
We were a wonderful cash-burning machine.
The .com failures continue to mount, especially.
Well, ultimately, you run out of greater fools.
After
At the start of millennium, a speculation that computer would have error changing their clock from 1999 to 2000 would cause a worldwide economic problem. But preparation were made for this. On Friday, March 10, 2000, Nasdaq stock market peaked at 5,000 points, but things are about to turn ugly real quick. 3 days after, on March 13, Japan announced they are in a recession, which sent shockwaves in stock market as a global sell-off is triggered. In the subsequent months, an antitrust law against Microsoft, media caution against this market, scandals, frauds, and investor losing confidence caused the market to fell with over 75% fell in stock value of .com companies and $1.755 trillion wiping out from the market in November 2000. The market was also hit by the 9/11 incident. After the dust was settled, in October 2002, the stock market dropped to 1,000 points, a 78% fall from its peak of 5,000 points. Many companies rebound after that, including the likes of Microsoft and Amazon. Fines were imposed on investment firms for misleading investor. Mass layoffs resulted in excessive supply of programmers in the job market. Enrollment in computer science degree programs dropped significantly. There was one good thing about this bubble: it gave us the structure that allowed us to have the software and database we have today. Otherwise, an organic growth of the internet would have us lagging behind, with even the creation of sites like YouTube considered an impossibility would have been not for the .com bubble, that accelerate technologies like 3G and fiber optics as early as 1999.